Hello everyone, there has been a big movement in dollar INR as well as Nifty today, and all of us know what is the reason. US has reduced tariff on Indian exports to US, so that is a really big boost, and let us see how the markets have reacted. Okay, if you look at the dollar INR, remember this is the onshore chart from 9 am to 3:30 pm. We have seen a big down gap. Okay, so yesterday the market closed at 91.51. Yesterday night the tariff announcement was made, and today morning the dollar INR opened at 90.44, so more than 1 rupee lower than yesterday. Okay, so big down gap, and today most of the trades happened between 90.04.05 was the lowest level and 50.51 was the highest level. So 90 to 90.50 was where it traded today, more than 1 rupee lower than where it traded yesterday. Okay, so this is the onshore chart. Let me show you the offshore chart. Okay, now this is the 24-hour offshore chart. I want to have you all to have a look at the indicators that we are following. Very clear-cut uptrend. This is the linear regression channel, and look at this pink line. Okay, this is the 50-day moving average. Okay, sorry, let me get my pen. This is the 50-day moving average where the prices are currently. Okay, so we have seen historically, look at the pink line here, all these regions, the 50-day moving average has been a support indicator, and currently we are at the 50-day moving average. Also look at this upward sloping channel, linear regression channel, and the lower trend line which connects the lower highs or the support level, that is exactly coming at 90 to 90.20.25. Okay, now what does that mean? That means technically 90 to 90.50, 90.30 is going to be a support level. Okay, two indicators converging to suggest that this is a support level. Obviously the 100-day moving average is much lower, that is around the 89.30.40 level. Not saying that the market will go there, I am just saying if it goes there by demand supply mechanics, then that is a certainly level to buy dollars. Okay, even currently when two indicators are suggesting that it is an important support, dollar importers should buy dollars to hedge. Okay, you can use forwards, you can use vanilla options as well. Sorry, we have seen dollar INR touching almost 92, and now we are at 90.20, which is almost like 1 rupee 80 paisa, almost 2 rupees lower from the high. So this is a level where you should certainly do some short term hedges, use some forwards and also use vanilla options. Okay, now let us also look at the Nifty. Okay, let us look at the Nifty. Obviously after the great news, okay, there was a huge gap up. Okay, the Nifty opened very close to the all-time highs at around 26,300, but then intraday was quite disappointing. It closed much lower here, okay, at 25,700. So there is a big fall of around 600-700 points from the peak. Okay, so Nifty looks to be slightly disappointing, and all the more disappointing because this is the same level where it met resistance at the previous time, and again sorry, come here and we have met a resistance in December, and today after the great news was announced yesterday, we again hit the same level of resistance, and after touching that we have come almost 600 to 700 points lower. Okay, so that is negative on Nifty, not a great sign for Indian equities. Short term, long term obviously it is bullish, short term. Okay, so that is on the Nifty. But let us come back to our dollar INR. Dollar INR is where we are. Very strong recommendation to dollar importers. Remember, in this bull run of dollar, we rarely got chances to hedge. Dollar exporters got regular chances to hedge. So dollar importers should certainly do some bit of their import hedging. As I said, some with forwards, some with vanilla options. If rupee gains and goes towards this 100-day moving average, sorry, let me get my pen. It goes towards the 100-day moving average. I am not saying it will go. I am just trying to say that if market dynamics pushes it to that level, towards the 100-day moving average around 89, 89.50, 89.30, you should certainly hedge more. Dollar exporters who have already hedged quite a bit, I just released a video on Friday where I suggested that you should hedge because the levels are just too good. So who have hedged, fantastic, you can lay low for a while. But dollar exporters who have not hedged, they must certainly look to do some vanilla options. You can wait a while. This looks more like a temporary correction. The trend has not changed, okay, but you should hold your guns for a while. But if you are mandated to hedge, use vanilla options over forwards, okay. So that is it from my side. I will come again towards the later part of the week to see whether these levels sustain or hold or not. I will come back again in 3-4 days time. So that is it for today. Have a great evening ahead.